Take us through what the global handover is looking like, because I believe not very good moves coming in from the US, and we also have some key data points, right?
Absolutely, and it's very interesting what we're seeing playing out with the US markets, because right now when you look at S&P 500 futures, though they rose on overnight trading, this was of course as big tech names Alphabet and Microsoft saw shares rally on strong earnings. So futures linked to the broad market index climbed 0.7%. When you look at Nasdaq 100 futures, they popped 1% also, and futures on the Dow Jones Industrial Average also gained 30 points, or just about 0.1% thereabout. And when you look at shares of Alphabet, of course, they jumped 11% in extended trading, following a better than expected first quarter earnings. Now, the company also authorized its first ever dividend that will also be the company also authorized its first ever dividend as well as a $70 billion buyback. So that is an announcement that we saw from Alphabet. When you look at Microsoft, then the shares climbed 4% after the software maker posted fiscal third quarter results that surpassed Wall Street expectations as well. But now also when you look at the broader indices, what you're looking at is that the strength in these mega cap stocks that we've seen off late could also give the major averages a boost after a losing day on Wall Street. So largely when you look at the day that we saw yesterday, the blue chip Dow slid 375 points, while the S&P 500 as well as the Nasdaq composite dropped just about 0.5%, 0.5% thereabout, and 0.6% thereabout respectively. Now when you look at this sell-off and what this was triggered by, like Snehi rightly mentioned, there was of course data that was playing in the picture. Thursday's sell-off was largely triggered by new US economic data that showed a sharp slowdown in growth and pointed to persistent inflation. Now when you look at gross domestic product, that expanded by 1.6% in the first quarter compared to a Dow Jones forecast of 2.4%. Meanwhile, the personal consumption expenditures price index also for the period rose at a 3.4% pace, well above the previous quarter's 1.8% increase. So that largely is the handover that we saw coming in for the US markets. When you look at European markets also, what you saw is that they closed lower. So when you look at the stock 600 index, that closed about 0.6% lower thereabout, and most sectors were in the negative territory. So that largely is the handover coming in from Europe as well.
Well, absolutely, and with that, let's also take a look at what's happening with oil, because lots of factors weighing in when it comes to oil prices as well. So let's understand what's happening with the oil market largely. And so crude oil futures have risen yesterday, and this is the market on the back of market weight disappointment coming all across the US on the back of its economic growth again and potential geopolitical risk from a looming Israeli invasion of the southern Gaza city of Rafah. Now, like Shreyansi mentioned, the GDP data is subdued in the session and a little lesser than what the street was penciling in. But traders have also realized that the oil market is tight and the situation in the Middle East continues to remain foggy. Now, in the Middle East, Israel is launching airstrikes on Rafah as the country makes preparations to invade the city, despite warnings from allies that such an operation would compound the humanitarian crisis in Gaza ongoing right now. Now, on the back of this, West Texas Intermediate, which is the WTI June contract, closed at $83.5 a barrel, up 76 cents or almost a percent. Year to date, US oil has gained more than 16%. Now, Brent contract for June also closed at just above that $89 per barrel mark, up 99 cents or 1.1% coming over there as well. Year to date, this global benchmark has added more than 15% as well. So largely, this is what is happening in the world of oil. Let's also take a look at what's been happening with crude, with gold then. And gold seems to be rather steady as of now at $2,340.9 per ounce. So that's where gold is at right now. These prices did rise yesterday as US Treasury yields rose after economic data showed signs of persistent inflation, lowering the hopes of the Fed Reserve cutting rates anytime soon. So on the back of these numbers, we're expecting some volatility to come in the US markets as well. On the back of that, people are expected to resort to gold more than ever, as gold is considered to be a safe haven asset as well. So some price movement can be seen in gold as well going ahead. But largely, well, yes, that's the handover coming in from what's been happening in the world of oil as well as gold.
Absolutely.
If you like this video, then like, share and subscribe to ET Now.